Hey, everybody, welcome to this episode of Coffee with John. Looking forward to talking with Rob Misheloff. Rob, it's great to connect with you. You are the CEO and founder of Smarter Finance USA. You have a company dedicated to providing transparent and fair financing solutions for small businesses. We'll talk about that. But first, I want to dive into the following. You ran a marketing firm for about a decade, and then you moved into this industry. Kind of a completely different industry. And so I think a lot of times people are always reinventing themselves or wanting to reinvent themselves. A riddle I sometimes tell when I'm speaking is 5 frogs are sitting on a log, 4 decide to jump off. How many frogs are left on the log? And so most people answer, 1, but the answer is 5 because 4 just decided, they didn't take action. You took action. So how did you I want to start off, and thanks for being on the show, where I want to hear about the reinvention.
Sure.
Yeah.
So well, first of all, it was out of necessity. I had run a direct mail marketing firm from 2003 to 2013. And direct mail stopped working as well when smartphones came out and everybody in the world had access to the internet. So from 2008 to 2013, we saw a steady decline in response rates to direct mail. And around 2013, we were just about out of business. And interestingly, someone who had left our company, a salesperson, went to go make a better living somewhere else. He went to go work at an equipment finance company, and he was playing basketball with someone who still worked for us. And he said, well, so you're doing this equipment finance thing now. Well, how do you get your leads? He says, oh, well, they send out mailers and then people call. And I said, whoa, well, we can maybe save our business here. So I found the players in equipment finance and cold called them and scheduled meetings. And we started doing advertising, direct mailers, for a lot of the folks that are today my competitors. And I found through that process, a lot of them weren't being honest with their customers. And what I mean by that, they were actually, I was taking meetings with folks and they were bragging to me that, well, equipment finance rates can be pretty high. They can be higher than people expect because they want to compare business financing to consumer financing. So you have to do smoke and mirrors, and these guys can't figure out the rates. So you just tell them whatever. And I had come from working with reverse mortgage guys and gals who were, on the whole, they were in business doing reverse mortgages to help grandma, to help older folks not have to choose between food and medicine. And it was very rare in the reverse mortgage space that we came, our customers, that we came across shady people. And I found the exact opposite when I started working with folks in small business financing. And I said to myself, there's a lot of ways to make a living. I'm not going to help a bunch of thugs steal from small business owners. It's just not good. And I don't feel good about that. And so it's like, okay, well, I still have a mortgage. I still have a family to feed. I said, well, maybe I'll just do this, and I'll start a website and I'll talk about all the things that nobody wants to talk about. What are the real rates? What are the scams that can be pulled on you, and so forth. And that was 2014, and here we are, still going strong.
So you looked at a business that you could maybe professionalize a little bit more, and realized that transparency works.
Yeah.
Right? Yeah. So which is great to hear. I like the end of that story. And so I think, so you start this business, you have this marketing background. How did you begin to then, it sounds like it organically happened, but just kind of spell it out. how you kind of bridge the two worlds, because it sounds like they kind of went hand in hand in a way.
They did. And I had to learn something new because, again, I got out of the direct mail business because direct mail didn't work anymore. And what was great about 2014 was people really hadn't figured out in niche businesses, larger businesses were different, but in the niche businesses, people really hadn't figured out SEO yet. And so I took about a 6-month crash course in learning everything I could about getting people to find my website when they searched for things related to equipment financing. And in fact, it wouldn't be so easy today. It was remarkably easy to put up a website. I mean, I don't want to minimize it. It took a couple thousand hours of work to get everything going, but it was remarkably easy at that point to get the phones ringing just by throwing up a website and having transparent information and actually answering people's questions.
Let's go back to 2008 for a second, because I have a question.
Sure.
So you talked about how from 2008 to 2013, the market began to shift and change. In September of 08, the market crashed, and it was devastating for everybody in most every industry everywhere. And so, what were some of the lessons and the new lens you began to look at business through, kind of end of 2008, 2009-ish, as you were kind of seeing your business change, knowing that you had to evolve as well?
Well, it was interesting in our industry. We were doing direct mailers for folks in reverse mortgage, and reverse mortgage was still a very viable product in 2008, 2009, and 2010. In fact, it was growing quite a bit because people needed money. They were seeing their stock portfolios crashing. Now, real estate was crashing as well. So in some cases, depending on what market they were in, for instance, in Nevada and Florida, people whose houses had been worth $400,000 were now worth $100,000. And so there was a greater fallout rate when houses actually became appraised. But from our standpoint, we saw still pretty strong demand, even though response rates were dropping to the direct mail, simply because folks needed the money and they would do anything they could to get it. So the conversion rates for our customers were going up. And what happened that actually bounced us out of the business was, come 2013, response rates had continued to drop, but it was wildly profitable. And HUD, which is part of the FHA, made some rule changes to the program that made at the time, it made the product less profitable. And so that, combined with the lower response rates, made, buying advertising just not feasible for the majority of our customers.
Yeah. What was the biggest business lesson you learned during that time?
The biggest I learned is I should have diversified earlier. And what I mean by that is kept watching direct mail response rates drop. I had a 5-year window where I could have learned whether it was SEO or Google Ads or social media or something else. And we had been outsourcing. We incidentally had a small part of our business that was doing Google AdWords, but we were outsourcing it. And I didn't go and do the hard work that I needed to do to learn how to market differently until I had to. It was, well, you either make this work or go get a job.
Yeah.
And I've never been successful in my life at having a job. So I didn't have a choice. And had I been more mature. I mean, I was in my 30s at the time. Had I been a little bit, it's funny because you think about, I think back to my 30s and a lot of people that I know currently in their 30s, and you think now I'm adult, I know so much, and I was dumb when I was in my 20s. Now that I'm in my 50s, I look at myself in my 30s, and it's by your 50s when you figure out you never had anything figured out, and I still don't have anything
Right. Everything's right. A work in progress. Well, fast
Yeah.
forward to today, based on what you just said, how are you learning and infusing AI into your business?
in a number of ways. So first of all, one of the things that we've partnered with a firm that's partnered with a few folks in our industry that helps take data entry away. And so you have a lot of businesses still have a lot of humans that type things from one form into another form in order to get them into the CRM, or take a handwritten application and are transposing it, and that's a tremendous waste of human hours. And so we've got a relatively cheap service where when we receive an application for financing, we send an email, we forward that application to a designated email address. It populates in our CRM, runs that person's credit, and sends the sales rep a uh, uh, the credit application, and it's all filled out. It's all in the CRM. No one's doing that data entry anymore.
Yeah.
Secondly, AI has changed marketing yet again. And for example, we used to get 500 leads or so a month from people searching on Google, and we've seen that fall roughly 80%. And we're in the process right now of kind of redoing our website, learning what the LLMs, the Claudes and the Chat GPTs and so forth are looking for, because there are a lot of unique differences. And in what the AI looks for versus Google. And for years, Google's been the only game in town, and that's changed tremendously.
Let's talk about your business. Small businesses need money. You are there for them for that. So, just kind of talk about what they need you for. What is the typical business needing you for that they're maybe not thinking of soon enough, right? You talked a little bit about, I wasn't thinking of that technology soon enough. I think sometimes small businesses think they can go a little bit further than they can before asking for help. And then they don't realize sometimes there's a actual process to getting the money. And maybe then they're not, they're behind the curve versus in front of the curve. And so when should small businesses be thinking about you when maybe right now they're not? And what are some of the most common things that they're coming to you for?
So it's interesting because we'll get people that contact us about 6 months before they actually need money. And that can be good, but a lot of times it's a mistake. And the reason why is if you're going to need money in 6 months, you should look for your least expensive option, which is not going to be a private lender like us. It's going to be either an SBA loan or going to your bank. And people come to us when they can't get bank financing, which incidentally is 90% something of small business owners. And it's interesting because I proved it to myself that there was a reason for the company to be in business. And because what we did is about 5 years ago, when we first started, we had a very small office. We only had 5 people, and just had not a lot of money either. So bought a bunch of really cheap furniture off of Amazon, and that's what we had in our office. And then we ended up moving to a much larger space, and needed furniture. And we wanted to have nice furniture this time because it just makes it easier for recruiting if you don't look like you're broke. And this is $100,000. And we could have paid cash for it at that time, but I didn't want to. And it's very, very rarely a good idea to take, $100,000 out of your working capital for equipment that you can pay off over 5 years. So I called our bank, and at this point we'd been in business for a while. My business partner and I both had perfect credit. It was our own bank, so they could see that, number one, what our revenues were, and number two, that we could have paid cash if we wanted to. And the bank said no, and called a couple other banks and got no's, and then went to one of the lenders we use for our own customers and got an approval in 2 hours.
Yeah.
And so when someone comes to us and applies, and they say that sure is more than I was expecting to pay, we said, well, you can go to your bank. And again, the bank's a long process. So if you need the equipment tomorrow and you're looking for the absolute cheapest option and you want to see if you can qualify through a bank, you can't need the equipment tomorrow. You need the equipment in a couple of months.
Yeah. So what do clients, so what do they end up ultimately doing with you? Do they finance, for X amount, what's an average kind of term or, thing of that,
Sure. So our average ticket size is about $60,000. The vast majority are 4 to 5 years. If I had to give you an average rate, and most of our contracts don't have a rate on them, but it's easy
enough. You don't
enough
have to do that because somebody, these podcasts are a weird thing. Somebody may hear this in 3 years. So I don't.
True. Yeah. It'll change.
Yeah.
I'll give you some ballparks. If someone could just go to their bank and they come to us, we will be very, very slightly higher usually than the bank. Yeah. And when I'm talking slightly higher, I'm like less than $100 is the difference in payment. If somebody has terrible credit, so someone will come to us that'll be a startup with a 500 credit score or something, and we can sometimes get those done. Their payment would be double what it's going to be if they went to a bank.
Yeah.
Not that the bank would say yes, but compared to bank financing, their payments should be double. The vast majority of folks that come to us are somewhere in the middle.
Yeah, that's great.
Yeah.
Great. What's the biggest lesson you've learned in the last year about your business?
In the last year? Well, I'll tell you, oil prices make a big difference, right? We're seeing, particularly, we do quite a bit in the trucking markets, and trucking is famously volatile, but it's interesting because every few months, either they're all going out of business or, oh, it's back on. Let's get as much, like right now it's back on, and folks want to get as much trucks and trailers as they can possibly get approved for.
Yeah. Let me ask you a question. So somebody comes to you, they need a loan. What do they do if they're stuck and can't qualify for a loan? What do they do next? Do they always qualify when they come to you? What do they do if they can't qualify from a bank and they can't qualify with you, but they need the money? And I guess the real question is does it mean they should have come to you way sooner when they were in a different financial position to then be able to kind of invest in the business earlier, and then, because of what they invested, they're generating more revenue because of it?
So that's a challenging question. And the reason for that is most people that come to us, unless it's we'll have folks that are in an open bankruptcy or have a 500 or below credit and no money and are trying to start a business, and there's just no way to help that company. Folks with we work with roughly 30 different banks and private investors, represents somewhere between 75 and 100 different credit portfolios. Outside of very challenging situations, we can usually approve most people.
It's great.
Yeah. A lot of times what they do, if we can't say yes and they absolutely need the equipment, there are some loans that we don't offer. They're called MCAs or merchant cash advance. They're short-term loans. They're extraordinarily high. A lot of them are daily payment loans. Some of them are weekly payment loans. The reason why we don't offer them, and we do occasionally do one or two, we do one or two of them a year, with full transparency. And the transparency being, if you have any other way to get this money, do that, because this is a terrible, terrible loan, which is why not many people take us up on it, incidentally. But we have seen people that we can't get approved because lenders see that they've worked with one of these loans, and those loans are a ticket to bankruptcy. What happens is a lot of times they'll take 10% of your revenue as it comes in, and you have to re-up that loan depending on the term. Sometimes it's 90, sometimes it's 180 days, and they just spin you, and they'll get someone 5 or 6 times as they keep on having to re-up that loan. And then a lot of times, because they're not making money fast enough, they end up taking out a second or a third loan. And all of a sudden, 30% of your revenue is getting cut as soon as it comes in the door. Well, that's most companies' entire profit margin. And then you're in a death spiral.
What's your recommendation to businesses? Because you've seen people come to you in desperate times for money, maybe coming at too late in the game. What's your advice to small businesses to remain profitable? Think about the money that they need to get to run their business. Probably what I'm hearing you say, earlier than later, to make sure that they're making the right moves. I'm a business coach, so I work with companies of all sizes, and profitability is number one. Having a product that people will buy is number one. Marketing your business with clarity so people understand what they're buying is number one. Understanding your P&L, number one. All of these things are really important from a business perspective. And so if you had to kind of guide people based on mistakes that you're seeing them make, what would that be?
The number one mistake that we see is folks wanting to buy something and understanding the revenue that asset's going to generate and not understanding the profit that it's going to generate, because those are two entirely separate things. One of the parts of our sales process, and one of the most important parts, someone calls in and says, I want to buy X machine or X vehicle. And we say, okay, great. Let me ask you a few questions. And we ask, what's the revenue going to be from this asset? Now, what are your costs going to be? And then after the payment, what is your profit going to be? Because that's what's going to tell you if this is a good idea or a bad idea.
Yeah.
The number of folks that we talked to that hadn't thought in those terms, it's probably 70 or 80%.
Right.
And that's like, you only buy something if it's going to either increase your margins through greater revenue, or it's going to cut costs. Those are the
Right.
only two reasons to purchase something for a business.
Yeah.
And yeah, I mean, you have to know your cash flows.
You got to know your cash flow, and this is for another show, and another scenario, and maybe with an added guest of this discussion. But the importance of small business owners to from day one understand their expenses and where they can
Yes.
cut, and the revenue that's coming in, and where they can grow revenue, and how they're growing revenue, so they don't get underwater in these scenarios that you're talking about, and then they're not desperate. That's a horrible, horrible place for a business to be. We used to say in commercial real estate, desperate people do desperate things in desperate times. It leads to just not a good scenario. And
Sure.
and so I think just reverse engineering some of the things that you're seeing for small business to make better decisions, get to you sooner. Maybe you consult with them on when the right time is. Better to come to you too early than too late.
Yeah, absolutely.
Yeah. A line I always like, it's, better to be a year early than a day late. And that seems to be, a good something for you. All right, quick speed round. So your ideal clients, real quickly, your ideal clients are?
Small business that either can't or doesn't want to pursue bank financing.
Okay, great. All right, quick speed round. A book that's made a big impact on you?
Liar's Poker.
I'm actually not done reading that book, but I do have it in my Audible. If you could have coffee with anybody, living or dead, who would it be and why?
Warren Buffett. And I can't afford it. He auctions it off every year, but he has such good advice for not only investors, but in general, running a business, and he's the model. He's probably the only billionaire nobody has anything bad to say about, because he is transparent.
He's a good guy and simple. He breaks everything down to the simple, really.
Yep.
Best piece of wisdom you've ever received?
Don't make a permanent decision based on a temporary problem.
Well said. Last question, finish the sentence. One thing every small business owner needs to be one step in front of is?
The economy.
Yeah. Be able to forecast and shift and have a live business plan that's really understanding the headwinds that are going to affect their business today, tomorrow, 12 months from now. Make those kind of, assumption sets. There's something that I'm a believer in is there's no bad decisions. There's just bad assumptions. And you got to always be looking at what is, in real time, what are my assumption sets today based on, to your point, of what the economy is showing me today. And as a business owner, small, medium, or large, I need to always be tracking that, through data, through facts, through guts, through instincts, and all of those factors. Rob, tell everybody where they can connect with you and learn more about you.
Best place is our website, www.smarterfinanceusa.com.
It's great. And you can reach me at johndwoskin.com. Rob, I want to thank you for your insights today, not only on what you do, but how you reinvented your business, listen to the tea leaves, listen to the mentors that kind of guided you along the way to kind of find that next path to take your skill set and transfer it over to what you're doing today, the people that you're helping, and also kind of the pitfalls for small business people to get in front of before they fall into a problem. I think it's great. Appreciate you taking time to be on the show. If you want to reach Rob, give me your website one more time.
smarterfinanceusa.com.
All right. Thanks, Rob. Appreciate you.
Thanks, John.